Hi everyone, I hope you're well. This is CoinsKid. Once again, before I continue, thank you for your support across the entire community here. The likes, the shares, all the comments, everything is really, really well received. We really appreciate the time and efforts that people put into sharing the content as well on social media. And obviously, we really appreciate your subscription. Thank you very much for spending time with us. And yeah, we do this completely for free, and we don't want anything in return. And you know, we're all in this space together, all trying to make a book and all trying to learn as well. So yeah, I'll crack on with a video. And if you're not a member of the community the Telegram group, it's in the link of the video description below, in a link there. So do head over to that channel. We do need to sort that out. It's getting quite large now. It needs segregating into sections. So we'll come to that. But basically, jumping on the weekly time frame here, always zoom out. This is what I tell everyone. Always zoom out on your projects. Looking at the weekly, you can see we've got the bullish cross. It's awesome. A couple of months ago, you know, on the weekly time frame, you got that EMA bullish cross where the yellow line goes above the red line. Amazing. Look at it. It's absolutely bolted. Okay, and what it is now, you can see it's just run into a little bit of a brick wall there, but it doesn't mean the show's over. Okay, it just means that you're going to roll over perhaps and go a little bit sideways, just like you did here. Okay, form this pattern here, and this is actually a really, really bullish pattern. Okay, I'll show you that pattern right now. So that's a bullish pattern called a bear pennant, where you go up and you form this kind of triangular sort of horizontal triangle sort of pattern where you're trading in a range like that. Don't forget, this is a weekly time frame. Okay, so that took a couple of weeks of where you went up at a peak, you sort of come back on yourself, look bad, look like you were coming down, and then you just traded a little bit like that before you got the pop out. And it's a continuation pattern, okay, because you trade up into it, resistance, support, gets tight, boom, pops out. But what you want to see here, okay, just like there, the EMA, so to go up, go a bit vertical, roll over a little bit, and that's what you're looking at here, where you're sort of potentially looking at something like that for a couple of weeks. Just get this EMA, creep up with it, get a little bit more of a curl on that EMA, so it looks a bit more healthy, okay, because otherwise you're going vertical, and you don't want that yet. That's coming towards the end of the bull market. That's when your market cap will just 10x overnight, okay. So I think the current market cap for HOT is around 4.7 billion. So, you know, from a conservative figure at the moment, if you look at the top 20, you're looking at around about a 10 to 12 market cap. So you are potentially looking at about a 3 or 4x from this point just to break into the top 20, I do believe. But then towards the end of the bull run, you're going to see a massive euphoria event, okay, like previous bull runs where there's just a flood of money that comes in and everything just goes up vertical. And we will deliver that message to you in the channel. And to be fair, if you're looking at charts, you'll be able to know that yourself, that it's pretty much the end, and you need to have that exit strategy there if you are involved, because, you know, you don't want to be left bag holding. No one wants to be left bag holding. Take your profits where you can. So effectively what we're looking at here then, we're going to dive in deeper, and what we do, we jump now from the weekly to the daily. It's as easy as that. Just start diving in. So immediately on the daily, we're looking relatively healthy now. You can see we're getting quite extended, and we've rolled over. We're looking good. We've held up the EMAs. This is the yellow line and the red line. Do you see this? You've got this bullish cross. Where's the bullish cross on the daily time frame? Just there. So in November last year, we got a bullish cross on the daily time frame, and ever since that point, you've been bullish. Okay, this is what I say to people: when you see them on the daily time frame, you buy and go to the beach. Okay, and then when you see the reverse, a bearish cross, just like here, you got that bearish cross. Okay, so you got the bullish cross, buy. Well, that's a retest. You got a bullish cross there, buy and go to the beach. You get the bearish cross, sell and go to the beach. You got the bullish cross, buy and go to the beach. And effectively, look, you're in and out of trades there. So from that buy to that sell, you was 82% up. From that sell to that buy, because you can short as well, okay, you was 30% in a short profit, or you gained if you're selling your hot there, okay, on the bearish cross, and you're buying back here, okay, you've accumulated 31% more hot tokens. And effectively that's how it works. So since you've got this daily cross, okay, on the EMAs, the 20 EMA and the 55, you have gone up, and that was in November, yeah, November last year. Hot has absolutely gone hot. You can see it's gone hot. It's gone up a whopping 44x. Okay, so if you'd have bought and gone to the beach there, you'd be 44x up on your investment at the moment. But I want you to know that, you know, this sort of stuff doesn't go on forever. It does roll over, as you can see. Bear market, you know, bear cross, bullish cross, bear cross, bullish cross sort of thing. And that's what happens. And bear market is sluggish and it's brutal, and you're under the EMAs constantly, and you can't get up for air. So we've been in a bull market for hot since you formed this bullish cross on November the 24th 2020 of last year, and it's done nothing but go up parabolically. But it is cooling down as it goes up, which is really, really healthy. It's good to see this level of consolidation where it's going up, consolidate, up, consolidate, up, consolidate, and you're now looking at that level of consolidation. What I would say here, what I would expect a little kiss of this yellow line, okay? You could see how when it's gone up and got extended from the yellow line there, it's come back down, had a rollover, and it's kissed the yellow line. That's the 20 EMA on the daily time frame. You are looking for that. You've not had that yet, okay? So I would be anticipating that, because if that carries on going up now, if it bounces from here and just marches up, you've not even had a kiss of the line. Do you see that? You've not had a kiss of the line. You've not touched it. And effectively what it is, when you touch these lines, you're refueling these rocket ships, okay? Because these are rocket ships and they need fuel, okay? And they get the fuel off this line. It's like a petrol line, a fuel line, and it needs to fuel the rocket ships to blast it into space, sort of thing. So yeah, I would expect some sort of more level of consolidation. I know it looks healthy now, and you're probably going up and you hit your head on some form of resistance there. We'll dive in a moment and look at what that is, but at the moment I would say that it's potentially going to look like just a little bit of a roller, a bit of a level of consolidation there, just a little bit sideways. Very, very strong. It's been really supported, and a really good thing here is that you're bouncing off the previous swing high, okay? So you see that all this got really overextended, okay? Because when you went up, you was swing high, swing low, and you're not bouncing off the previous swing high. Up there, swing high, swing low. Where's the previous high? It's down here. So in all of it, you're getting really extended, because you can see in the original impulsive move there, which was way back in February, when you went up on that swing high there, when you form your swing low, you was resting on that previous swing high. Do you see that? So what you've done there, when you've gone up in that swing high, you've got overextended like that, and you've not fell back on a previous swing high. So all of a sudden you are looking a little bit overextended, and it's looking to start to cool down. So each time you've gone up, you've not fell on a previous high until you started slowing down just there. You've got a previous high test there, add a little refuel just there, and then you've got a little bit overextended again. And so this is the previous high, and what you're doing now, you can see that you are falling back to it. You've had a couple of touches on the daily time frame there where you broke down, and it's acting as really, really strong, solid support. So that is a really, really good target now to lay down, because this is what we do in the channel. We show you where levels of support are. Okay, we don't say, oh, it's going to the moon without fundamentals or technical analysis to back it up. We do think Holo is going to appreciate 100%, okay, and it's going to go up from here. But you do have your levels of support that you do need to keep an eye on, and you can immediately see where they are just from looking at the candlesticks. Okay, so you've got that really key level there that you've had a couple of wicks down now on the previous high. Okay, so you do need to keep an eye on that level of support right now for hot. Okay, and you can see how close this yellow line's getting to it, which is the 20 EMA on the daily time frame. So you know you may see yourself hit some sort of resistance there, roll back down. It looks bad, looks like you're crashing. Okay, but all you're doing is looking for that retest of that EMA, that 20 EMA on the daily time frame before you get that kick on and bounce. So what we do, this is where you start zooming in. Okay, you start zooming in even more. So we're going on a 4-hourly time frame here. So on the 4-hourly time frame, you're being held up by the EMAs as well. Again, on the 4-hourly time frame, extremely positive. You've got your bullish cross down here. Okay, you've had your back test, bearish cross, immediately followed by a bullish cross. Wow, I don't see that a lot. I've literally just seen that on Cardano. Yeah, wow, that's very similar to Cardano. Okay, so basically this thing that you've got going on here, and I'll always be transparent with you and tell you in the channel, you have when the yellow line goes below the yellow line, the red line there on the 4-hourly time frame, it's called a bearish cross, and you can see right there, this is how strong hot is. Okay, start to go bearish on a 4-hourly. Basically you lose the level of support, and you're being pushed down, and projectively when you get these bearish crosses, you're just caught in a downtrend before you find the level of support, get brought back up and form a bullish cross. But you can see just there, literally like hours, you're talking a day. So you got the bearish cross there on the 4th of March. You started to go down. Oh no, going into oblivion. But then you got brought back up. Look at that massive candle there. That massive, and you got your volume step in as well. Massive candle that is. And then you got brought back up, and you know, literally a day later you formed a bullish cross. That's really bullish. Cardano's literally just posted one of those a few days ago. So and it did that straight after as well, and it's starting to do that. Perhaps Cardano's ready for a jump. It needs it. So basically from then you've absolutely bolted, and you can see you're still being supported by the EMAs there. You start to fall through here, okay, where you got a little bit overextended, okay, but you have been supported. You've been brought back up off this previous swing high, as you can see, which is our base level now, our target, which you do need to target if you do see further breakdowns for Holochain. But I do believe that that's a really strong level of support at the moment if it was to collapse any further. But what you've got now, you've come down with this Bitcoin correction, obviously. You've come down, you corrected, major level of support. You got back above the EMAs, which is really, really healthy, okay? Because you don't want to start going through the EMAs, because this is what happens. Look, you go down, you lose it, and you form these bearish crosses. But there, obviously, you got bought up. So there is a hell of a lot of support for HOT. Hell of a lot of support. There's a lot of buying pressure there. And if you look at the RSI as well, it's on a nice little level now to just get kick-started again. The MACD is looking relatively healthy. Let's have a look at that MACD. Let's have a look at that MACD. Okay, so the MACD, the histogram's starting to turn. You see that at the bar chart's starting to run out of steam, and then this blue line here is starting to almost look like it's going to cross the orange line. That's a bullish cross on the MACD. Okay, and you can see every time you get a bullish cross on the MACD, let's see somewhere that's, you can see just there was a MACD bullish cross just there. You can't quite see it, okay? Let me do this, you might be able to see it. Okay, you see that where the blue line went above the orange line there, so it went up. That's a bullish cross. Look what it does to it. Pushes it up, and then the histogram goes green. Look at that bullish momentum that you get. So you're potentially looking at a very similar scenario there, where the blue line is going to go across the orange line and form that bullish cross on the MACD. Your histogram's looking to go green. You're looking good. You are looking good. Perhaps you won't get that kiss off the daily time frame there, but if you was to sort of hit a ceiling, hit your head on something and come back down, then I would anticipate that on the daily time frame there, you know, you would sort of wait for that retest there. And in my opinion, if you're not involved in HOT and this comes up and it kisses it, fantastic entry point. Okay, fantastic entry point, because if it holds it, it's showing its confirmation, the bullish bias, and it's just getting that little kiss before it continues up in this sort of trajectory up there, and appreciating obviously the market cap for HOT into those multi-billions there. So looking at the 4 hourly again, we'll drop the Fibonacci on this just to give a future price, because it's all right saying HOT's going to the moon, but we want a prediction of this next impulsive move, which projectively is forming right now, because this is what these are: impulsive move, corrective move, impulsive wave, corrective wave, and now you look like you're forming a new impulsive wave, and you can actually get a target for that, okay, using a Fibonacci extension. So on your drawing here, on your chart, you go down to the third column down, okay, to the third column down, and you've got a little arrow, you click that, and it's Fib retracement. You click it on, and all you do is click on the bottom of the swing low. I've taught you swing high, swing low. Click on there, and what you do, you drag it up and you put it onto 1 like that, okay. The top is on 1 and the bottom's on 0. Drag that over so you can see a bit more clearly. That's your bottom, that's your base. So what you do is bring this down so you can see a little bit better, okay. So you've got your swing high, swing low. So from the bottom, you're starting to retrace back to this previous high, and it is simple as that. But you're not going to get there overnight, okay. You're going to run into levels of resistance, and you can see right now you've hit a level of resistance as you start to retrace off the bottom. Got through the EMAs, fantastic, brilliant, okay. But you have hit your head on the 050, which currently sits at 0.024668. You can see it's hit its head just there, that wick, okay. So it's struggling to get back up above it, but what you're doing, you're falling back, okay, and you're falling on the 0.382 as support. You can see that bouncing, and it also coincides with where the 20 EMA is on the 4 hourly time frame there, okay. So it's acting as a key level of support right now. So what you need to see is the bounce up, okay, and get through these levels, because once it gets through these levels, and especially a 0.618, which is a golden ratio, you go up there, take that out, smash it to smithereens. You could look at that next impulsive wave, and you will be looking at that price target up there for HOT, which is a nice little price target going forward. And the reason I'm using the 141 extension is because you've obviously broke down, you've lost support through the EMAs there. If you was bouncing off a 20 EMA, which you potentially will do in time, okay, as you get more momentum, because this ran out of steam and you've got to work harder to get to a new high. Basically, you only target the 141, the 1.41 extension there on the Fibonacci retracement. So it's looking golden, okay. But again, you know, do target these levels here as levels of resistance. You've got this level of support. You can't effectively lose. You've found a really good solid base there, I would say, of support on this base of this previous swing high. So that's a rock solid base of support right now. Again, if it was to come back down there, that would projectively be where your daily EMA is on the 20 daily EMA on the daily time frame there, okay, and that would be a really good entry point in my opinion. So that's basically HOT, Holochain. It's looking good, it's looking healthy, okay. But again, obviously, if you get the breakdown of Bitcoin, then you could potentially see it fall further and fall through this level of support there. And again, all you got to do is come on the charts, okay, and just target your previous swing high. So that would be a level of support right there, and then that swing high, level of support right there. you know, and it is as easy as that, to be honest with you. And you would see bounces there, okay, just like you've seen the bounce here when it started to correct and you've seen it coming down and you didn't know where it was going to fall back down to. Just come up to your chart and target the previous swing high. You can see multiple touches there. That would have been a fantastic place to enter, because in this correction here from this base, if you'd have targeted that, you would currently be up around about 20% for hot. And that's trading 101, okay? So good luck to anyone involved. I hope this gets through all these levels of resistance, and I hope it gets up to that target there. I will drop that on for you so you can see that right now, okay? And that's a march on towards that 0.039, and that from here, from this point, would be an appreciation of 68%. So onwards and upwards for hot, but obviously I need to drop these in there for you as well, just in case you do have a bit of a breakdown and know where your key levels of support are, because I'll be transparent with you, you know, if it was to break down, and you could see a breakdown, okay, and it's perfectly healthy it did break down, because it'd be coming back down to test those EMAs on the daily time frame, do you remember? Okay, and if it did break down and get a touch off that, you know, if we click the daily time frame now, I bet that's where that level of support, that swing high, I bet it sits there, okay? Look at that, boom. You see what I mean? It's just charting 101. It's a previous swing high of on the 4-hourly time frame, so it's coming up. You may see it break down there. I'm not saying it will, but I'm saying if you do see it break down, we always give you levels of support in this channel, okay, and you can see where you potentially get the really good buy zones, because if it does break down, look what happens. You get the pump of 20% the next day. Broke down, pump 20%. If it breaks down, pump 20%. The really good entry points, and that's what we do. And we always tell people in this channel as well, not financial advice, okay, but when something's going up, don't get involved. Wait for the pullback to the EMA, confirmation of support, then get involved. And that's basically it. Good luck to everybody, and once again, thank you for all the continued support across the channel here. It's amazing. I really do appreciate it, and all the comments and the community that's grown for, you know, expanding and sharing is caring. Keep sharing the videos on social media and wherever you can. But outlook bullish, okay, we're in a bull market, and I do see a lot more appreciation for Holochain. We're showing no signals of any sort of bearish sentiment yet. You know, the reversals, like I said to you, you look for bearish crosses on the daily time frame, like I've shown you in the start of this video. You buy and go to the beach, you sell and go to the beach, okay? And we've not got that signal yet. So do take care. I'll see you soon. Bye-bye.